So let's say you make 10 bikes and they're nice bikes. You sell them for $1,000 each. So you've got $10,000 sitting in your bank account. Now that $10,000, what it effectively represents is the 10 bikes that you produced. So when you go and spend your $10,000, what gave you the wherewithal to go and spend $10,000 and buy things was the fact that you produced 10 bikes. The production of capital gave you the wherewithal to go shopping, but you're using money to go shopping rather than going out there and trying shopping with your bikes. Go to the grocery store, here's a bike, how many loaves of bread do I get for this? No, you do it through money.
Yeah.
So that $10,000 in your bank account is storing up 10 bikes of capital. And you're going to spend that money at the end of the year going on a nice trip. But before you go on that trip, the central bank doubles the money supply. Now, when a central bank doubles the money supply, when they increase the money supply, they don't create capital to get that money. They just create it out of thin air. So that newly printed or newly created money has no capital stored up in it, but it obtains capital as soon as it comes into the economy by extracting capital from the rest of the money already in existence. So when that...
And that's why we have inflation.
And that's when we have inflation.
Okay,
when that new money comes into the economy, it takes 5 of your 10 bikes from your $10,000 and puts it into the new money. Now your bank statement says you still have $10,000, but now your $10,000 is storing only 5 bikes instead of 10. And so now your $10,000 will only buy half as much as it would have done before the central bank doubled the money.
Welcome back to Unfiltered Conversations. Today, I'm joined with Paul, an investment veteran who spent decades managing billions. Yes, B with a billion, and helping lead Ivy League teams on using like that plain language to explain the forces shaping our money, our markets, and our future. He's the author of Capital Offense, and he's not just here to like rage bait us or just talk about money, but to give clarity and understanding of what money is. So, Paul, thank you so much for being here.
Well, thank you, Michael. It's great to be here.
Yes, sir. Let's just get right into it. On air, in a recent note, you said that your goal isn't to cover your headline about what you talk about usually, how we're drowning, especially with money, but to give people a different way of looking at what's happening. And what's that different way you're talking about?
Well, the different way is to help people really understand how an economy works and how the monetary system is working against them. It's not a conspiracy theory at all. Those in charge who have led us down this path, I believe that they believed this was actually going to be for the greater good and that everybody would benefit from it. But theory alone would tell you that it wasn't going to work. And, and then it played out exactly as many of us had said it would. And so it's led to significant wealth disparity in society. It's led to housing affordability crises where younger people, they can't even dream of being able to buy a home, despite the fact that they're just as well educated as their parents and willing to work just as hard. And society's become increasingly divided because the way the system is working, it's pitting people against each other. And that's not the way a free market capitalist system is supposed to work. The way it's supposed to work is if you only benefit to the extent that somebody else benefits from your actions. It's a mutual benefit. I can go into the details of it if you're interested. It's a mutual benefit system, not benefit at the expense of somebody else. But increasingly, that is what it has become And that's why
Mhm.
people are getting angry. They don't understand why it's working like this. And so they've misdiagnosed the patient and the dangers that they prescribed the wrong medicine, which would make things even worse than they are today. So that's why I've
Mm.
written a book and I have this free blog that goes out every week to try and help people understand what's going on. So give people a voice, give people understanding, give them the truth. And with that comes great empowerment and also empathy comes with that as well. When
Mm.
you really understand the motives of people and what people are going through, the challenges and all this kind of stuff, you do tend to have more empathy, and then we can work together to fix the problem. But right now, we're all so divided. You know,
Yeah.
there's two different camps, and they blame each other for all the problems, and so that's got to change.
Mm. So I do have a question, especially with the breakout of AI. And now AI has really disrupted the job market, usually, and also other markets as well when it comes to our economy, where I see a lot of people saying, hey, I have this AI program. You just invest $20, $30 here, and it does a better job investing your funds. Than a human at Wall Street,
Hmm.
that follows the market, right? And then also we talk about AI with, I guess, when it comes to being a entrepreneur or business owner, CEO, that they're laying off people left and right, as you kind of alluded to, where people are losing jobs extensively, and
Yeah.
they don't really have, I guess, a backup plan or what they can really go into, especially now that people are using social media as a medium to get themselves, I guess, famous and also sell books and different things of that nature. What do you think people are getting wrong about what's happening out in the market so far?
Well, specifically with respect to I mean, this really is like something almost revolutionary, it seems. Big technology shifts come around once every maybe even not even a generation, but maybe a couple of generations. I don't know,
Yeah.
maybe the dot-com was the last one, so the previous generation. But you also had, the automobile. That
Yeah.
was revolutionary and people in the horse and carriage industry were all losing their jobs. And so the answer, well, not unfortunately, but the answer is not to stop the technology from happening. The answer is to help those who are affected to adjust. And it's
Mhm.
and it's painful for them. Let's not kid ourselves. I mean, there's enormous benefits from AI, but it's painful for a lot of people, and we have to acknowledge that. And so how can we help them retool, retrain, adjust to the new environment? And I know somebody who was, or he's an animator. And
Mhm.
about a year and a half ago, he was telling me that this was like March, and he was telling me that um, they expected him and all his fellow animators that within a couple of years, 90% of the animators would lose their jobs because of AI.
Jeez.
And
Ugh.
then when I saw him 3 months later, I just sort of jokingly said, "So have you lost your job to AI yet?" "Yeah." He said, "Yeah. I lost my job 2 weeks ago." I couldn't believe it.
Mhm.
But what he did, he then pivoted. So now he is teaching animation. He's doing private lessons at
Mhm.
home. He's booking, rooms at community centers and booking students coming in there, and so he's adjusting to the environment, which is what you have to do. You have to do. So it's not a lot of fun for those directly impacted, but you can't stop progress from happening, right? It's you know?
And that is so true. You talk about that, like, I guess, pivoting and being present, especially like now he has clientele. He's teaching people about animation, and you talked about that a little bit in your book when you said you was present for your clients, right? Especially as the market and adapting situations change. And you said it was, but I guess when you was there for your clients, you said it was never really about impressing the people.
Uh-huh.
It was about educating them, so they can make good decisions about the market.
Yeah.
Where did that standard come from for you in your life?
Yeah, so it was an evolution. Um,
Mm,
when I was very young, up until I was about 22 or so, like, I was very intellectually dishonest. Like, I was an awful person, a very
mhm,
argumentative, competitive, had to win every argument, make stuff up in the argument just to win it. Like, I wasn't interested in the truth. I was just
yeah,
trying to protect my ego. And, yeah, I had an argument with my girlfriend. This was 1984. And at
mm,
some point she said, "You know what? I can't beat you in an argument, but I know that I'm right." And when she said that, I was thinking, I know you're right too. I just can't admit it. And so, needless to say, that relationship didn't last very long. And
mhm,
I just remember walking back into the house that night at that moment and saying to myself, I've got to change. Like I was
mm,
pushing so many people away. And I didn't think I was a bad guy, but yeah, so it's been a journey since then. And then
mm,
certain things evolve through experience and then I sort of morphed into this or evolved into this do no harm. So I end every
mm,
blog with be free and do no harm.
mm,
So, if people out there, if everybody out there is being free, i.e., doing what they want to do, but ensuring that whatever it is they do doesn't impose any harm on anybody else, either physically, emotionally, or financially, it's almost
mhm,
impossible not to make the world a better place. And
mm,
so this do no harm attitude then sort of developed. And then when I started, like you said, when I first started making presentations to my clients when I was younger, my goal was to impress them with how smart I was because I figured that was the best way to get their business. And then, so I would say what I thought was necessary to impress them, not necessarily what was my truth. And then I'd get caught in maybe little white lies or omissions, and it was getting really embarrassing.
mhm,
And then I just said, "This is so wrong." Um, and I said, "I'm not doing it anymore. I'm just gonna tell people the truth." Like, as painful
yeah,
as it is for me or how embarrassing it is for me, I'm gonna tell them. When I screwed up, I'm gonna tell them exactly why I screwed up.
mm,
And then careful communication became my like, along with investing,
your role.
my great passion. And it felt
Ah,
really good to see the response from my clients who were financial advisors, stockbrokers, financial planners. The response from them when I empowered them with knowledge, with truth, with understanding, empowered them to then go and talk with their clients and help their clients understand what was going on and make better decisions for all concerned. And it's just a
mm,
win-win-win situation. I said, that's just gotta be a better way to make a living. And
yeah,
I didn't want and for many years, I've always had in my mind that whatever financial wealth I have, I want it to be a reflection of my contributions to society. I don't want it to come at anybody else's expense.
mm,
And, so that's been my focus for a long time, but it did evolve and it grew. And then as I
yeah,
understand more about how the system was broken, I started talking more about that, and then people said, "You should write a book about this." I said, "Oh, well, maybe I should." I don't
mm,
know. So in 2019, I started writing my book.
yeah. And so when you're talking about the market, when you're talking about being honest and ethical, especially in your book, basically and how that got tested, what would you tell people moving forward with the market itself? Is the market something like I was always taught like my good friend Dave Liss, he taught me about day trading, right? And he said the market is like a woman. He compared it to a woman. He said um, it's very very emotional. Like if it hears this, it's gonna react in this way. And, so while he was trying to teach me how to day trade, he always told me to keep that concept in mind. But one thing I notice nowadays, especially when it comes to the market kinda does shift like that, but long term, the market has growth. How do you tell your clientele, especially when they're talking to you or going out or venturing on their own, like, how to move in this market?
So, first of all, I tell them not to day trade. And it's, I'm just joking, but like I'm a long-term investor.
Mhm.
And, as an investor, like investing is a very humbling business
Yes.
because you quickly figure out all the things you don't know and all the things that you are incapable of, things that you thought you could
Mm,
do. Thought you could predict which way the market was going to go or how
mm,
strong GDP would be or where interest rates were going. Sometimes you get it right, but you just got lucky. And so,
mm,
what I learned and what I communicated to my clients is that nobody knows what's going to happen in the market. There are plenty
mm,
of people out there with opinions and very well thought out opinions with respect to what's going to happen. But a lot of those opinions are exact opposite. One thinks it's going to do this, one thinks it's going to do that, and they both sound
mhm,
reasonable. And they're both smart people, but they don't know. And
mm,
so all you do know from an investing perspective is the fundamentals of the business. Is it a high quality business? Does it have good return on capital, a great corporate culture? Is it have good top line growth prospects? Does it have a strong balance sheet? Are the fundamentals sound? So that's one.
mm,
Then the other thing is the valuation or the price that you're being asked to pay for that quality business. Is it very expensive? Is it reasonable? Is it cheap? And then you make a decision. And
yeah,
likewise, in the economy, you don't know what's going to happen, but you know the fundamentals.
yeah,
So, is the economy in good shape from a debt and government spending perspective? No, it's terrible.
yeah.
It's been terrible for years. It's just
Mhm,
gotten to greater and greater degrees of terrible.
mm,
And the naysayers will always say, well, look, nothing's bad has happened yet. So I guess you're wrong. Well, no, of bad things have happened. In order to keep this thing growing, central banks have had to increase the money supply to keep asset prices going higher, which results,
mhm,
and we can talk about the mechanics of it, but it results in
yeah,
lower productivity growth. It results in higher or wider wealth disparity. It results in a more divided society. These are the costs that we are currently paying. Eventually,
yeah,
we will have the ultimate cost of a massive global financial crisis. And then, depending on
mm.
what we do when that happens, will set the stage for the next number of decades. Either we'll finally fix it and we'll have a
Or
fairer system, or they'll double and triple
yeah,
down, which they've done over the last
you
couple of crises, and make it even worse.
mm. And you're so right because you talked about it on your site. You said the world is veering into a dangerous and divisive path, and the next, I guess, breath for change is that for that great faith in people. And what I would ask to you, like, what keeps that faith that you have alive in people to get it right?
Yeah, well, I just my own interactions with people, um,
Mhm.
you know, uh, friends and colleagues and family, and then doing, things like this, meeting people like you. And, people are very smart. The average person is super smart, particularly when it comes to what to do with their own hard earned capital. And I also believe that the average person, like people I know and I meet, are very good people. They want
Mm,
to see other people succeed. They don't like seeing other people suffer. They do want to help other people. It's just, for most of us, it's human nature.
yeah,
And so I see it all around me all the time, but people don't know how to get this whole thing going because they don't understand what's happening.
yeah,
And so that's the reason why I wrote the book. And the book is written in very easy to understand language. I
Yes.
use analogies and stories step by step. So you don't have to be in the finance industry or you don't need to be an economist. I'm not an economist. But if you
Yeah.
read the book, you go step by step, you will understand what's going on and you'll understand what needs to change in order to
Yeah.
fix the system. And unfortunately, you'll also understand that it will not come without pain.
Mm. You talked about I would say, the wealth disparity between the rich and the middle class and also the poor, right?
Yeah.
And I know you were born in Wales and grew up in Montreal.
Yeah.
Um, and you lived in Toronto in the 90s and still do, correct? If I'm not
Yeah.
mistaken?
Yeah.
Okay. How does those different places shape your understanding of class, opportunity, money, and also, uh, I guess, the middle class versus the not so lucky class?
Yeah. So I don't know that the different places that I lived really helped to shape my views or inform my views with respect to that because they're all fairly similar,
Okay.
developed economies. And the
Mhm.
issues are pretty much the same in all developed economies because the central banks in all those countries are using the same
Oh,
playbook
yeah.
and they all talk to each
Yeah.
other.
Mm,
Now, in terms of different classes, you tend to surround yourself with people who are, your neighbors who by definition have similar incomes to you because you have you live in the same neighborhood and you can afford that type of house, whether it's, expensive or cheap or whatever. And so or at work, or at school. So um what I know about other income quintiles or cohorts or whatever you want to call it, I
uh-huh.
mainly know through reading rather than
Mm,
interacting with them. And, but I don't know that that matters, to be honest with you.
got you.
I think it's appalling what's happening. And I mean, a lot of people have tried and do try to improve opportunities, make opportunities more equal within society, and they're not. Um, but that is a goal that we should all fervently strive for. Because some
Mhm.
people, they just grow up in certain communities or families and they never stand a chance, or
Yeah.
they always have a chance. And some people always point out, look, that person grew up poor and they made it to be a millionaire. Yeah, but that's like a 1 in 10 million chance. And
Mm,
that person just
yeah.
happened to be born like brilliant. You know,
Yeah.
I'm not brilliant. If I was born in that
Yeah.
circumstance, I wouldn't have made it.
Yeah.
And so, just giving people a fair shot, I think,
Mm,
is a you don't have to know those people to know that it's not fair that they're not given a fair shot, you know?
mm, mm. You stepped into the investment scene, and I would say, I think your career started in '92, if I'm not mistaken,
Yeah.
before McKinsey, and you worked in institutional sales inside a major bank corporation. And I think you did investment banking worldwide or banking, if I'm not mistaken.
Yeah, it
Research
was
showed.
like a big corporate bank. It was, an investment bank, but I was more international
Yeah.
equity, sales, trading, a little bit of research, stuff like that.
So when you started working there, what was your first, oh, this is how it really works when it comes to the whole investing and basically the money system?
Well, yeah, it wasn't till many years after that, to be honest with you. I
Mhm.
was very naive and just and I don't think it was as bad as in the '90s either. It hadn't
Mm,
really it only really started in earnest, you might say in the late '90s. It was sort of the, Fed-assisted bailout of long-term capital management, but really in '01, '02. This is when Greenspan, who was head of the Federal Reserve at the time, and then his cohort, Ben Bernanke, started targeting asset prices. And my belief, my theory is that they sacrificed the mainstream economy on the altar of higher asset prices. Higher asset prices became their goal. But that only
Um,
benefits those who own assets,
yeah.
just stocks. And the vast
Yeah.
majority of stocks are owned by the top 10%. I think the bottom 50% of Americans only own something like 2% of all stocks. And so that was starting, and it just didn't seem right to me, but I didn't really understand what was going on. It was only as that housing bubble, was peaking in about 2006, that's when
Yeah.
that's when it really hit me. Oh my God. Like, what
Yeah.
are they doing? And then I started
Mhm.
thinking, well, maybe this has been going on, years prior. I just hadn't noticed.
Yeah.
And then it got worse with the bailout of Wall Street during the great financial crisis. And ever since, they've been on that same path where they have to do more and more of these long-term destructive actions that save the stock market in the short term.
Yeah.
And so it was an evolution, but around the great financial crisis, that's when it all really, you know, came together for me. And then ever since then, so what's that, 16 years, 17 years,
Mhm.
all I've read is economics, economic philosophy, theory, monetary policy stuff, going back even hundreds of years to understand the basics of economics, what really makes an economy work. And
Um,
yeah, so it's been a great, fascinating journey, and I've learned a lot, and there's still a lot more to learn, right?
yeah.
But yeah, it was an evolution, I guess.
Yeah, and that's pretty amazing because, like, when you highlighted, 2007, 8, when we had the financial, crisis, the bubble, especially with, real estate, it burst. A lot of people lost everything and
Yeah,
couldn't come back and, do anything special, but I noticed you won the Morningstar Foreign, Equity, Fund Manager of the Year in 2011, so something shifted in your viewpoint. What changed inside you, if any, that you started to understand?
well, in terms of what my job was, nothing really
Uh-huh.
changed with respect to what I was doing. So I felt that I had a very important role to play. So earlier I said that in a free market capitalist system, you're only supposed to benefit to the extent that someone else benefits from your actions. It's the
Sure.
creation of capital. So let's say you make a bike, you just created capital. I make a suit, I just created capital. We exchange that capital with each other. You've got my suit, I've got your bike. The
Mhm.
world is one suit and one bike better off, right?
Mhm.
There was no bike and
Yeah.
suit. We both made one, exchanged it with each other, but it didn't come at anybody else's expense, right? We did
Um,
no harm when we did that. So I felt I had an important role to play because I was taking the savings capital of Canadians, allocating it around the world to who I thought were the best businesses, those who would take that
mm,
capital, put it to productive use to create more capital,
mhm,
to impress their customers, improve their customer value proposition so their customers would buy whatever product the company was making, which they were able to make it with the help of my client's capital. And so the customers
mhm,
would exchange their capital with the companies we're investing in, the profit go up, the company can hire more people, pay people more, the higher profit pushes the share price higher. Our mutual fund would
mm,
go up. Our clients make money. We make money. The financial advisor makes
yeah,
money. Everybody wins. That's the way it's supposed to work.
yeah,
And and so I loved my job. And but with central banks interfering in stock markets, they tend to short circuit that process. because now instead of establishing the conditions that allows for the most efficient allocation of capital within the system, so those that are
Mm,
companies that are creating a lot of capital get more capital. Those who are destroying capital, those basket case companies, you starve them
mm,
of capital. Guess what? You're not getting my client's capital because you're not putting it to productive use. Instead, you're just paying your CEOs and your CFOs a lot of money, lots of options and stuff like that. Guess what? You're not getting my client's capital. You're a basket case company. You're a zombie. You should go out of business. But central banks
yeah.
bailed them all out. And that's why I started to get angry because this
Mm,
role that myself and millions of other investors is a very important one. The price discovery process or mechanism of capital markets is very important for the most or the most efficient wealth creation in an economy. It leads to the most jobs, the most best paying jobs over time, less wealth disparity. And yeah, so that's when I started to, because it was impacting me directly. It was making my job really difficult. And I said, this goes against everything that capital markets are supposed to be there for. They're not supposed to be there as a get rich quick scheme for
yeah.
billionaires. No,
Mm,
that's what's that's what it's turned into because of central banks.
mm,
But that's not what it's there for. And it's really bad. And it's leading us
mm,
down a really treacherous path. And that's why I'm trying to change it.
mm. And it's crazy because your credibility is in markets, but I would say your message now, it reaches beyond the market, especially how you teach. You mentioned that, you even own a brewery at a period of time. What did having a real world business teach you about the economy that spreadsheets can't?
Yeah, that's a great question, Michael. So it was actually a brew pub. So we had brewing
Oh,
equipment. It was a pub, and then we turned it into a brew pub. So we bought some equipment, hired a full-time brewer, and yeah, it was amazing. Financially, it was not successful, but
okay.
we owned it for 7 years, I think. Yeah, 7 years.
Oh,
And yeah, it was a great learning experience because for the first time now I was actually a business owner rather than just an investor. Now, I didn't run the business because I was still working, but we'd meet on Saturday mornings and, discuss what was going on, how much money we were losing, stuff, all this kind of stuff. But what um, it taught me, I already knew this, but it really taught me how competitive that industry is and how hard successful
mm,
business owners work. And it's not just in the restaurant industry. So many entrepreneurs work super long hours. Um, so so it taught me that. It also one good- when I bought that, I was really excited about providing an amazing customer value proposition. And I really wanted to see customers coming in and having great meals and great
mm,
service and great music and great ambiance. I thought it'd be really, and I still love that, the thought of that. One thing
mm.
I didn't really think about, which I enjoyed just as much, was being an employer and employing
Okay.
people and giving help, people a livelihood. Head chef, sous chef, head bartender, servers, hostess, whatever, and getting to know these people and getting to know their challenges. Like the pub industry is it's a unique industry, right? And those who work in a
Yeah.
pub industry, I love
Yeah.
them. I love those
Yeah.
people. They're honest people, just hardworking and characters, and they were very grateful for the employment that we were providing them, and we would have like staff parties and stuff like that. And for whatever reason, when I was buying it, I never thought about that aspect of it.
Wow.
So it was a surprise and a really good surprise, and still in touch with some
Uh,
of the people to this day. And we closed the place in 2020, so 5.5 years ago.
oh, man, That that is crazy. Yeah, that is wild. You know, and I would say a lot of times, especially, like, for instance, like, I guess when, your brew pub, did y'all, like, brew your own, like, signature ales or anything like that?
Yeah. Well, actually, so this, I don't know if you can see that,
Yeah, Black Hole,
Irish
Hurston.
Stout. We got another one here,
Yeah,
Apollo
an
IPA.
IPA, yeah.
There's a Constellation Cream Ale, and so
Mhm,
we decided to go with the astronomy theme for whatever reason, and my friend's daughter made all these up. But yeah, so we had maybe about 8 or 9 different beers. We had 2 IPAs. Halloween, we would do or October, we do a pumpkin ale, which
okay,
which was really
like
good,
that.
by the way. I never thought I'd like a pumpkin
Yeah.
ale, but it was fantastic. And, yeah, like, red ales and stuff like that. Yeah, so and we do a light beer as well, and, so,
Mm.
yeah, it was cool.
You know, you kinda talked about it, especially, now, especially being a business owner for, that many years and talking about the customer side of things and actually also being an employer, and now you have to, take care of workers and being part of their lives and their families. Uh, it's kinda I wanna kinda segue into what you was talking about, like, when you saying you argue about the empowerment process, that starts with understanding money and separating money, money from capital, and then
Yeah,
how do you explain that difference
yeah,
to, like, a 17-year-old me who's
yeah,
trying to,
yeah,
you know,
yeah,
trying to understand that?
yeah, no, yeah, so, yeah, the lack of an understanding of the differentiation between money and capital is one of the main issues, is one of the main reasons
Mm,
policymakers get away with what they do because they've also convinced themselves about the myth of capital and money, and they
mhm,
think it's the same sort of thing. It's not.
yeah,
So capital is anything that you produce, a good or a service.
mhm,
So like I said earlier, you produce a bike, you create a capital. I create a suit, I create a capital, and then we exchange that with each other. That's called
mhm,
direct exchange. We directly
yeah.
exchange the capital with each other. Another term is called barter, a barter system.
Yeah, barter system, yep.
But you can't have a large economy with a barter system because it gets impossible to calculate the prices of all these other goods. You know, how many kitchen chairs would it cost to take a flight to Florida or something like that? You know, it gets stupid. So instead of direct exchange, we have indirect exchange. So you would make your bike your capital. You would sell your capital for money, and then you would use
Mhm,
your money to buy my suit. So
mm,
you exchanged your bike for my suit, but you didn't do it directly, you did it indirectly through money. Money is called the
mhm,
medium of exchange. That's what money is there to exchange all the capital that we're all producing. So
mhm,
it's capital that's the most important thing for an economy. You can't have a large economy without either money or capital, but capital is more important. So you could have an economy with capital and no money. It wouldn't be very big.
yes.
But you couldn't have an economy with money and no capital. You could have billions of dollars,
Mm,
but if nobody's making bikes, suits, breads, cars, whatever, you got nothing to use the money for to exchange you know. So
yeah,
so so let's say you make 10 bikes and they're nice bikes, you sell them for $1,000 each. So you've got $10,000 sitting in your bank account. Now that $10,000, what it effectively represents is the 10 bikes that you produced. So
mhm,
when you go and spend your $10,000, what gave you the wherewithal to go and spend $10,000 and buy things was the fact that you produced 10
10.
bikes. That
Mhm,
the production of capital gave you the wherewithal to go shopping, but you're using money to go shopping rather than going out there and trying shopping with your bikes. Go to the grocery store. Here's a bike. You know, how many loaves of bread do I get for this? No, you do it through money, right?
mm,
So
yeah,
So that $10,000 in your bank account is storing up 10 bikes of capital, and you're going to spend that money at the end of the year going on a nice trip. But before you go on that trip, the central bank doubles the money supply. Now, when a central bank doubles the money supply, when they increase the money supply, they don't
Mhm.
create capital to get that money.
Yeah.
They just create it
Mm.
out of thin air. So that newly printed or newly created money has no capital stored
Yeah.
up in it, but it obtains capital as soon as it comes into the economy by
Yeah.
extracting capital from the rest of the money already in existence. So when that
And that's why we have inflation.
and that's when we have inflation.
Okay,
When that new money comes
yeah,
into the economy, it takes 5 of your 10 bikes from your $10,000 and puts it into the new money. Now your bank
yeah,
statement says you still have $10,000, but now your $10,000 is storing only 5 bikes instead of 10. And so now your
mhm,
$10,000 will only buy half as much as it would have done before the central bank doubled the money supply.
yeah. Man, man, that's crazy. You know, you alluded to it earlier when you said you wrote the book to give people ammunition to, demand the change they want, and hopefully we, in further generations will have that change, but like you said, it's gonna come at a great cost. What are the 3 smartest questions an ordinary citizen like myself can ask policymakers? Because, just like you explained the difference between capital and money, we don't understand that can help us right now.
Yeah, I don't know if there would be 3. I can't really think of well, I mean, I can't think of lots of questions you'd ask them, but the trouble is, without a sound understanding of
Mhm.
what's going on, your listeners would fall victim to whatever that policymaker, responded with. They would come up with some excuse that your listeners would not be armed or be able to counter.
Mm, got you.
So, rather than questions, I would say that it should be demands. And
Mm,
and 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 policymakers are not bad people. Like I said earlier, I do believe they thought they were doing the right thing. Now, arrogance gets
yeah,
in the way, and they wanna have control, which is a big mistake,
yeah,
and they don't wanna take the blame for the situation in which we find ourselves. But, they've convinced themselves and the population that there's such thing as a free lunch, that you can get something for nothing. You cannot. If you take out more from the system that you put in, it comes at somebody else's expense. There's no ifs, ands, or buts
yes,
about
yeah.
this. You just can't see who it is that's getting screwed,
The
you know? And so and so there's an old line saying that
Mhm.
the people always get the government that they deserve. But that's only
Mm,
true if the people truly understand what's going on and then can
yeah,
vote in the appropriate party or the
mhm,
appropriate leader and demand the appropriate actions. And once the people demand the right things,
yeah,
policymakers will do it because that's how they stay in power. And they want to do the
oh,
right
yeah,
thing. They don't like seeing
mhm,
people suffer either. They don't like getting blamed for all the bad stuff that's going on, even though it is their fault
mhm,
ultimately. And
yeah,
so it's just with education comes empowerment, comes strength. And as I said
mm,
earlier, empathy as well.
yeah,
And, you can, I know there are some out there who really make it an us versus them type thing.
yeah,
And when you do that and you try to affix like strong blame and hold people accountable and they are the ones responsible and they're going to be punished. No, because then, there's no way they're ever going to cooperate to try and fix this thing.
yeah, yeah, 100%.
And as I said earlier, I believe they had good intentions. They're not bad people. And
Mm,
so education, start demanding the right things. No more bailouts for Wall Street. stop manipulating interest rates, stop driving asset prices higher, shrinking government, shrinking the finance sector as well, which I was a part of.
Yeah.
Finance and government are both very important, but we really don't create capital ourselves. We help the private sector, we help facilitate the production of capital
Yeah.
in the real economy, right? But over
Yeah.
the years, finance and government have grown to massive parts of the economy, but we don't produce capital ourselves. We just keep taking more and more. And so we're riding on
Yeah.
the backs of Main Street people, and it's getting harder and harder for them to get by. The cost of living keeps growing higher and higher. Life is increasingly
Mm.
difficult because we're benefiting from their expense. And so,
Mm.
yeah, and housing is one of the clearest examples of that. How,
Yeah.
people have benefited. Like my generation, I'm a baby boomer. I'm 64. So my
Yeah.
generation has benefited at the expense of the next generation through higher house prices. Now, a house has no business going up in price because it's not a productive asset. But it became a Fed policy to drive housing prices higher to create a wealth effect because I thought it'd be good for the economy. The benefits would trickle down to everybody else eventually. Well, it didn't happen. But our house here in Toronto is worth 4 times what we paid for it in 2001. But
Jeez.
our house is not producing 4 times the amount of stuff that it did 25 years ago. It hasn't quadrupled in size. So it's not, we don't get 4 times because it's 4 times the capital. It's the same capital that a
Yeah.
younger couple has to pay 4 times what we paid for it. So it's a redistribution of wealth from their bank account into our bank account. The
Yeah.
mortgages of these enormous mortgages of the next generation and immigrants to our country are helping to fund the retirement of baby boomers. So we're getting something for nothing. We're getting more out of the system than we put in, and it's not fair. And the math
Yeah.
doesn't work. Like for so many young people, they'll never be able to afford a home unless something changes. And
No, you're totally right. Wow. You're not wrong.
and so the average age of the first-time home buyer in America right now is 40. Back in the 1990s, I think it was 31.
Mhm.
Um, I was listening to a podcast a couple of weeks ago where this economist is talking about how the global fertility rate has declined such that it's slightly below replacement value right now. And he says that the main reason the global fertility rate has declined is because house prices around the world have gone through the roof and young people can't afford to buy a home and start a family. So they keep putting it off and delaying it or not having them at all. This is a
Yep.
terrible outcome.
Yep. No, you're not wrong. I lived in Japan for several years, and their fertility rate was, at an average, it was at 2, and they always tried to get up to 2.5, and then when I was there, it went tragically low to 1.1.
Wow.
And yeah, it was bad. So, having children, of, mixed race and, Japanese as well as, uh, they had, Japanese as well as American citizenship, we got paid a stipend because the Japanese government decided that they wanted to give a stipend for everyone who had a child to hopefully to reinvigorate people to have children and help with the economy and different things like that, and it's still the same right now. I think it's still, like, at 1.1,
Yeah.
uh, with their fertility rate, and it's terrible. It's really, really terrible. To
Yeah.
this day, it's just
Yeah.
still bad. So, I will say my final question to you is, like, what is something you wish most people understand about your work that I, in this short time of this interview, this podcast, didn't ask?
Um, well, I think we covered a lot. You know, I would say that my motives are like honest, I would say. Like there's no hidden catch here.
Mhm.
Um and we all stand to benefit from this.
Yeah.
And if we don't change it, we all stand to suffer.
Mm.
And and when people with understanding, just, if people believe that we're all in this together,
Mhm.
then I think people will be willing to do the necessary but difficult thing to fix it. But they have to trust that we're all in it together. They have to trust our policymakers that it's not just them that's going to suffer. The policymakers will all be fine. And Wall Street's going to be fine. And no, we need to all in. And,
Yeah.
and Americans in particular are amazing at that sort of thing, rally to the cause. And it's an
Yeah.
incredible country when it's not divided. And
Yeah.
so,
Yeah.
so I think, if we get to that place of understanding, and that's all it is. It's just
Mm.
understanding, and people are smart enough to
Yeah.
understand it, but they just don't know
Yeah.
where to go, and if they read my book, they'll figure it out, and there's others out there also trying to help. And don't give up,
Yeah.
don't give up hope. A lot of people, younger people stopped saving, YOLO or whatever, because they figure they'll never be able to save enough for a house, I might as well spend all my money today and enjoy my
Yeah.
life. Well, yeah, enjoy your life, but don't give up. Still save, invest carefully,
Yeah.
and have hope for the future. And there's a lot of us out there who are working every day to help
Yeah.
people understand what's going on to fix this thing before it really gets out of control. And I have faith that we'll get there together.
Yeah, same here, same here. Honestly, me and my wife we joked about it, but when the economic crisis happened, we bought a home, and so we bought it where I guess we borrowed from the Federal Reserve at a 2.7% interest rate
Wow.
for our home, right? So very, very low. We have great credit. Now the average is like 5.4,
Hmm.
people starting out at. And so we're kind of hesitant because, of course, being in the military, you have to move a lot. We have to report somewhere else. And we're thinking about selling our home, but we don't want to sell our home because we don't want to jump up in interest to
Mm,
another home
yeah,
to pay that 3%, at minimum difference, even though
yeah.
we work with this great bank for a long time. And they was like, well, even though you guys got great credit, at a minimum, it's going to start, 5.4. So it's like, I'm like,
Wow.
geez, Louise. So it's like,
Yeah, yeah, yeah.
yeah, so it's like it's one of those things like we me and my wife joked about it, like, we need the housing crisis to go down again so they can drop interest rates
Yeah,
to
yeah,
so so we can go buy another home, then we'll be
yeah.
okay. But,
Well,
yeah, it's
but
yeah.
Michael, the issue is, which you probably know, it's the issue was the high home prices, mortgage rates. I mean, you were very fortunate to get, a very low rate and good for you. It's fantastic. But 5 or 6% 30-year fixed rate mortgage in America is still lower than the long-term average.
Wow.
It's only in the ultra low interest rate era of Greenspan and Bernanke that they forced the 30-year fixed rate mortgage down by buying trillions of dollars of mortgage-backed securities. So the very low mortgage rates is an unnatural state, which serve to drive housing prices higher. And that's
Mm,
so the issue is housing prices rather than mortgage rates. Now, it's easy for me to say
yeah,
because if you bought a house with
yeah,
a 2 or 3% mortgage, 5%
yeah,
mortgage looks very expensive. But that's the problem.
yeah,
That's what happens when you distort things. You
yeah,
Then you put people in awkward positions where now they have to make very difficult decisions. That's not what's supposed to be happening. This
yeah,
this should not be factoring into your decision, but it is because central
yeah,
banks created this quagmire. It's not your fault,
yeah.
you know?
Yeah, no, trust me, I'm totally with you. So The floor is yours. Please enlighten us and tell us what you have going on and share with us anything that you would like.
Yeah, well, thank you, Michael. It's been a great conversation. Um,
Yeah.
so I have a website. It's called Paddington Capital MGMT.com,
Hmm.
or Paulitical Economy is the name of my blog. So it's my first name, Paul, itical
Hmm.
economy.com. And so if people go to my website, they can just put their email in there and they will get a free weekly blog post. I usually send it out on early Monday evenings. There's no catch. You don't have to put any credit card or anything in there. No, just put your email. You will get a free blog post from me.
Hmm.
And I've got and if people want to buy my book, it's called Capital Offense: Why Some Benefit at Your Expense. So there's an Audible version. So if you like to listen rather than read, there's you can get that on Audible. And then otherwise you can get the book on Amazon, or you can get it at Barnes and Noble. I think Thrift Books
Hmm.
also has it. And yeah, and people can email me on my website too if they have questions, and I'll get back to them if they send me a question. And yeah, that's it.
And he's being very, very humble. If you go to his page, he has it set up like a old style newsletter. He has different posts. I think um, that you had like 300 and something. Your post for your blog.
358, I think I'm on, or something like that. Yeah.
Okay. Yep, yep, and he does he writes out his posts, he does it in audio, which I need to start doing
Mm.
as well, uh, and then all like you said, the newsletter, the book, the media, the testimonials, from different people. So, I mean, he has a plethora of great information to get you understanding when it comes to finances. One thing my mom and father, always taught me is that you need to understand what you have in your bank account. You need to understand how what you're putting your money into and the hidden things that you're not putting your money into. So, and that's one thing I'm very fortunate that education as a child, and not saying my mom and dad were, yeah, financially savvy. They just had enough sense to understand that
Good.
if you don't know where your money's going, it's gonna hurt you in the long run. So
100%. Good for them.
yeah, yeah, yeah. And so much. Thank you so much, you guys, for your time. Thank you so much for being here. It has been a pleasure. See you on the next one.
Thank you,
Peace.
Michael. Bye bye.